forget it. Those days are dead. Everybody I know in the crypto space is doing 3 or 4 things at the same time, as am I. And it's fun because it's exciting.
Yes.
And you kind of know that you're seeing the world in a different way than everybody else. And the world will catch up over time. And so you want to be as fast as you can. This is the fastest adoption of any technology in all human history. The internet, with 150 million users in 1997, was growing at 63% a year. Crypto, with 150 million users, is growing at 113% a year. So we go, because it's an exponential trend, we go from 150 million users to 1 billion users by 2024. That's how fast this is growing. Currently, it's a $2.5 trillion market cap. If we look at how fast tokenization is eating into other assets and growing itself, and we look at those adoption numbers, then the reality is all of the other asset classes, global equities, global bonds, global real estate, are all between 200 and 350 trillion, with the derivative market being 1 quadrillion and FX even bigger. So the thought process is that, therefore, if crypto goes to 250 trillion, which sounds about right, and it's
100x in 10 years
of an entire asset class, we've never seen anything like that. Mankind has never seen a larger wealth creation opportunity in a shorter period of time in all of history. Even oil didn't happen as fast as that because there wasn't enough uses for it. This, because it's digital and built on top of the internet, means you've kind of got Metcalfe's law on top of Metcalfe's law. So the exponentiality of the returns is simply gigantic. Now, let's say Raoul's an idiot and it all goes to zero. So the downside is, let's say I'm going to use Ethereum and let's call it 4,000. So we lose 4,000, but if it goes 100x up, you would take that risk reward forever. Now, it's not going to zero. Is it going to go down 50% to 2,000? Let's say that's the risk. So it's 50% downside, 100x upside. Okay, that's a 200 times risk reward. This is why nobody cares about most of the macro stuff anymore, because we all saw the rise of the other Metcalfe's law business models like Amazon, Google, Facebook, Apple, even Tesla. And we're seeing this again, but in an entire asset class of which we can participate this time as both participants in the networks and owners of the networks. And it's available to everybody. If I'm right, and let's say you're a cynic and you put in 1% and I'm right, you can still make 100%. Right? You can double your net worth with a 1% allocation. So you can be a cynic and take the bet. Or you can be like me and put, a large part of your liquid net worth into it because you really want to capitalize on it. Fine. You take your journey. You take your risk profile. That's all good. But to not have it makes no sense whatsoever. Again, you might not like it. You may not agree with it. But nobody cares what you think. The market is what matters. And the adoption effect. Again, people become emotional about assets. You shouldn't get emotional. You should look at the cold, hard facts of it.
You could describe to my audience how you reposition your portfolio and why.
Yeah, the shock, there's no shock that I sold out. I haven't sold out. I've kept adding all the way through. I just switched my portfolio towards Ethereum and now almost entirely sold out of my Bitcoin and invested more in Ethereum and then a bunch of other tokens as well. And that was based on an understanding of network effects and how many people were joining the Ethereum network and the number of applications being built on it, which is basically what drives Metcalfe's law, the value of the network. Also, I noticed that the community within Bitcoin was a little too overly tribal, and that was forcing people out of the community. So we've got one community that's shedding members because it's not welcoming, another community that's very welcoming, that's growing extremely fast. And, I'm a macro guy at heart, so I just look at the chart of ETH versus Bitcoin and it was going to break out. So I just moved all my eggs into a different basket.
Well, and
if I'm looking at it right now on my Bloomberg screen, ETH's up 440% 30% this year and Bitcoin's up 65. There is a probability that the Bitcoin maximalists are right and Bitcoin becomes the base layer money of the world. Is it possible? It's possible. Is it probable? Much less so. I have basically enough in the bank account to pay my bills. Every single other penny is in this. Sure, I've got shares in Real Vision and all that other stuff, but that's not liquid net worth. You know, that's all private stuff, and I've got houses and stuff. But this is every single penny. So do what I do. It sounds ridiculous, but it works really well. You put the money in, you know your overall risk, what you're prepared to lose. Let's say it's down 50%. That's a reasonable estimate of what you should be not concerned. We had a 50% drawdown this year. So you say, well, 50%, maybe even 60%, maybe 70%, whatever the ridiculous number is. And then you don't look at your P&L. You can allow yourself to look at the P&L at all-time highs, just so you can just smile to yourself. You don't look at it. You can look at the market. I mean, I've got the charts up. I've even got the bloody hourly chart up. I don't trade hourly. I don't trade my position at all. But I look at it because I like to kind of follow the structure of the markets. So I match my investment horizon with my time horizon of the trade, and I satisfy the adrenaline buzz by messing around looking at short-term charts. I don't trade at all. Technology is exponential, and they've never got their heads around it. It took me a while too, because we're macro guys, people like myself and Dan Tapiero, so we will look at the business cycle and assume that assets kind of recorrect. But this trade is a different trade to all of that. We're trading an exponential trend, and being a mean reversionist in an exponential trend is the way to the poorhouse. That's why nobody got Amazon. Most people didn't get Apple. Some did because it was quite consumer facing. And almost everybody tried fading the NASDAQ over time and failing. So I just think people just don't understand technology. Humans are linear thinkers and mean reversionists by nature. Anybody who's been in financial markets knows that there is something called a risk curve. And the risk curve is you start with the safest asset. So in the bond market, it's really simple. It's the US T-bill is the least risky of all. Then you move out to the 30-year. Then you move out to corporate bonds. Then you move out to junk bonds. And then you go to private sector lending or distressed. And what you've got is a return profile that at the right point in the cycle, you need to be taking risk. And at the right point in the cycle, you need to not be taking risk. Crypto works identically. We're humans. We operate in exactly the same way in every market. Same with equities, when you push out to emerging markets, then frontier markets, all of this stuff. So it's just a function of that. And yes, own some of the tail, own some of the new technology that may not be in play right now. I own some social token plays, some metaverse plays. The metaverse plays just pumped recently, where they did nothing for a year. But I kept them there because they went up and down. I didn't really look at them because I didn't care, because I wanted exposure to that part of the risk curve too.